spirits were sunken and low. Their bags weighed more than a ton. There was neither sign nor show when the bull began his run. The shields were shilling wall to wall. The gig was up, they had their fun, and every short got a margin call when the bull began his run. The candle's green came fast and tall. Each wick was bold, quick to stun. His eyes burned red and his horns did more when the bull began his run. Now fortune smiles upon the need. His bags of gold gleam in the sun. The outer stream of his balance sheet, and every bear is left with none. Since the bull began his run.
Fair warning, because I appreciate the earlobes of all of my listeners. The eardrums. You guys know what's coming. Pause or unplug your headphones now. 3, 2, 1. Yo! I'm not fucking leaving! They thought they had us down. FTX, Mt. Gox, regulators, choke point 2.0. All-time high. Suck on that green candle. How about it? It's Monday, ladies and gentlemen. Welcome back to the Jack Mallers Show. I call these Mailbag Mondays. No advertisements, no bullshit, straight signal from yours truly. You know how we do it. So with that, let's get started. I'm talking to you all at a Bitcoin price of $125,120 US dollars. That puts our market capitalization as an asset class at 2.5 trillion, cleanly on the nose. Our all-time high, $126,160, established today. Today, October 6, 2025, we are about 80 basis points from making a new all-time high. Bitcoin is worth now 31.5 ounces of gold per Bitcoin. And we are only 8.9% of gold's market cap. If Bitcoin is to equal gold, that implies a Bitcoin of over $1 million. If Bitcoin is the better version of gold, the digital version of gold, the future's gold, we have millions and millions of dollars worth of Bitcoin, tens of millions of dollars worth of Bitcoin. For those of you that keep track in Bitcoin block height, the real ones, the OGs, the crazy ones, as Steve Jobs says. I'm timestamping this episode at Bitcoin block height 917,946. How the hell are we, chat? It's good to see ya. You guys like that video? I love these videos. What's this?
You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up, don't you know?
Who's having as much fun as us, chat? Who's having as much fun as us? Welcome back. No ads. Only signal. Welcome back to Mailbag Monday, episode 86. Let's go. For those that don't know or are new here, this show, I'm the CEO of two companies, okay? One is the third largest corporate holder of Bitcoin in the world. We are seeking to be public on a stock exchange. We're going to IPO the business via de-SPAC. That business is called 21. We now own about $5.5 billion worth of Bitcoin. The other business is Strike, equally as massive in its own right, leader of Bitcoin financial services globally. I started this show because I want to contribute to the public conversation in a way that's authentic, in a way that's true, in a way that proves signal. No ads. This show doesn't pay my bills. I make money by running my companies and the Bitcoin I've been buying since 2013. This show is for the people. It's for truth. It's for the world I want my kids to live in. It's focused on Bitcoin, money, macroeconomics, okay? Okay? The show's blown up. Okay, we're at almost 40,000 YouTube subscribers. My personal Twitter's over 500,000 subscribers. Strike has over 150,000 followers on Twitter. It's insane. And I've been getting pushed. First of all, I traveled all last week. I see you guys out in the streets. I really appreciate it. It's the coolest thing in the whole world, this movement we're building. I saw you guys in the airport. My buddy got married in Charleston. I saw you guys in Charleston at a bar. Shout out you guys. Shout out all the Gen Z out there. They're like, man, I share your show with the friends I have. We're trying to make sense of this world. The job market's screwed. We're all in debt. We feel like the system is against us. So I love meeting you guys. I love giving you a hug. Shout out you guys. And we've created quite the movement. So upon demand, upon further request, I've created a Twitch account. If you guys like, I don't know. I never was a Twitch guy. I'm really bad at video games. I tried to play Call of Duty, got my fucking ass kicked. Got trolled out of the lobby, okay? But if you like Twitch, I'm now streaming on Twitch. It's the Jack Mallers. I also now have a Rumble account. It's a movement. Hey, listen, I'm not a professional podcaster, but we're doing something right over here on the Jack Mallers Show, okay? I have a Rumble account, the Jack Mallers Show on Rumble. We've got YouTube, X, Rumble, and Twitch. The dollar debasement trade is going mainstream. Bitcoin to the moon. They can't stop us. They can ignore us. They can try and tear us down, but they cannot stop us. We're destiny, okay? And with that, let's get into the rant. Today's rant, Bitcoin all-time highs and the end of the dollar's monopoly. It's all coming together. Okay, everything we've been talking about for a year now. Well, I've been talking about it for 13 years, but really I've been recording it on this channel for about a year now. Their only way out is to print money. The end of the dollar's monopoly has begun. The beginning is ending, and the end is beginning. Okay? The monopoly of the US dollar, that chapter is closing. Bitcoin is breaching all-time highs. Bitcoin is the fastest horse in this race. All right, let's get into it. For those that want me to answer your questions, I do live Q&A at the end of the show. Please leave it in the live stream chats, and my team will document it, and we'll go over it at the end of the show. First chapter, the charts don't lie. Okay, this chart from Charlie, guys, it speaks for itself. It speaks for itself because I hear all these people on the internet, they say, well, didn't Bitcoin not necessarily outperform Ethereum if you clicked on the chart here and then there? Or wait, what about that one time Dogecoin went up a lot? Listen here, okay? Listen here. You want to prosper? You want to have family? You want to be able to afford a home? Stop listening to TikTokers. Stop doom scrolling with all the low testosterone out there. To all these day traders driving Lamborghinis telling you they know how to pick stocks at the perfect moment. Wake up, touch grass, look at this chart. Bitcoin returns from 2010 to 2025. That's a 15-year track record. 15 years. Look at this chart. Holding Bitcoin, you've had 3 red years of 15. People ask me, dude, how do you do it? How do I do what? Win so much? That's what you want, you want to ask me a question? You're going to ask me how I just do green, 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 green. Look at that. 9,900%, 1,400%, 186%, 5,500%, 35%, 125%, 1,300%, 95, 301, 66, 156, 121, 27%. The king, the fastest horse. I'm telling you, the charts don't lie. This next one, gold, which is up 48% year to date, Bitcoin up 31% now, are the top performing major assets so far in 2025. We've never seen these two in the number 1 and the number 2 spots for any calendar year. In the 15 years Bitcoin has been around, gold and Bitcoin have never been 1 and 2. I'm going to say that again. Gold and Bitcoin have never been 1 and 2. What does that imply, guys? This is the new monetary era. I see all of these finance bros on all of the social medias. You got all these social medias where you got all this opportunity to spew all this nonsense. And they say, oh, you see that? You got some dude in an empty closet ranting about Bitcoin. This is the top. Who the hell is that? He must be in his mom's house. Yeah, okay. This is the end of the beginning. We are just getting started. And if you don't want to listen to me, that's fine. You can click on a different YouTube video. But I've been right for 13 goddamn years. Bitcoiners have been right for 15 years. You can no longer ignore the charts. The charts are the truth. And if you've got gold and Bitcoin leading for the first time in the asset's history where they've been operating together, that screams fiscal dominance. That screams fiscal emergency. That screams a new monetary era. That is a rotation out of the US dollar and US assets, guys. I cannot put it any clearer. I cannot put it any clearer. The charts do not lie. And I fully expect Bitcoin to rip and surpass gold as the top performer this year. Okay? Let's get into that. The established sequence. This from Macroscope, which, by the way, one of my favorite follows on Twitter. If you do not follow him at Macroscope17, he is an absolute gem. The guy shoots like 99.9%. I don't know who he is. Unbelievable legend. Also loves El Salvador and all the work that I've done there. The guy's unbelievable. Unbelievable. Shout out Macroscope. And with this tweet, of course, he's right. The established sequence. Gold moves up. It outperforms Bitcoin for weeks or months while BTC quiet or drops. 2, gold's outperformance over Bitcoin begins to slow and then reverses. 3, Bitcoin catches up and vastly outperforms gold and other assets. If this gold BTC cycle plays out like previous ones, we've entered number 2. We've entered number 2. You guys know this has been my belief as well. And it's not a belief like a religion. It's not a belief like a bias. It's a belief because of experience, guys. I've lived this. This is the data. This is why this chapter is called The Charts Don't Lie. You got to deal in objective reality, right? Look at the data. Look at the numbers. Do the math. That's all this all is. Wait, how much debt do they have? Huh, okay. Wait, how many more Bitcoins can we print? Oh, no more? This is it? Ah, yes, right. Number go up. It's math. Objective math. Lights came on. Wow, that was theatrical. My girlfriend must have just gotten home. Listen, I believe Bitcoin's overperformance over things like gold has begun. I believe we have entered number 2. I agree with Macroscope. I think Bitcoin is going to be by far and away the fastest horse. Let's listen to the fiat maxis over at CNBC, because even they get it. That's why I'm saying this is the beginning, or the end, the end of the beginning. The end of the beginning. Because everybody gets it. You guys keep tweeting at me, Jack, they're saying the quiet part out loud. Jack, did you see what they said on CNBC? Oh, yeah. Oh, yeah. I didn't miss it. The crazy trade, the cooked up conspiracy theorists, the crazy Bitcoiners, we're not so crazy anymore. The dollar debasement long Bitcoin trade is going mainstream. Let's listen to what they had to say on CNBC.
Take us through the price action here, because we are seeing that similar kind of consolidation breakout, but we got some kind of bottoming patterns of developing each time the consolidation happens.
That's right. So as we can tell here, it's a very clear bullish pattern. Now, the only difference between this one so far and the previous two is we haven't got the full extension yet. Now, there's a very important point here, is that the timing of when these breakouts occurred, which are at the very beginning stages of the fourth quarter, 2023, 2024, so here we are again right now. That's because there's been positive seasonality for Bitcoin over its history, over the last 10 years, up nine.
In the fourth quarter, especially.
In the fourth quarter, especially October. Here we are now. We know Bitcoin's already up a good amount, so I think this has ability to eventually take advantage of this and much higher.
Okay, so that's the regular gold versus the digital gold trade. Let's clear this and let's put the comparative up, because the relative price movement can tell us something about maybe future performance as well. No guarantees, of course, right? The disclaimer is always there. But what did the pattern show you? This is the course of the past kind of year or so. What are you seeing here?
That's right. As we can tell, coming into the month, it was a pretty big performance gap, almost 20%, right? So there is a tendency to have this close. Now, we've seen this before as well, where it started off very similar, and then as gold stopped, this is when Bitcoin started to rally again. And of course, by the time you got to the summer months, those percentages were now the same again, which I think has a pretty good chance of happening once more. That could even, again, gold moving just sideways or lower and Bitcoin continuing to move higher. And I think you see that into the fourth quarter, into the end of the year.
So we've combined all of those together. What we are concluding with this is if the historical patterns have played out like they have in the past, we could see a rally for Bitcoin and a consolidation phase for regular gold.
Very well said.
A consolidation for gold and a rally for Bitcoin. I fundamentally believe that is the case, guys. It's becoming mainstream consensus. The quiet part out loud. Next, the fiat debasement trade goes mainstream. Okay? Trump came out and said, you grow yourself out of debt. What does that mean? We're going to run it hot. There's going to be no austerity. There's going to be no magical Elon cuts in Doge. There's going to be no magical other countries are going to pay our bills through tariffs. We're going to grow ourselves out of this debt. That means we're going to print the money. We're going to run the economy hot. Real rates are going to be negative. That means Bitcoin is going to the moon. That is what we are seeing. Guys, when you see stuff like this, growth out of debt, that means inflationary. For all my Gen Zers out there, that means buy Bitcoin. That means inflation is coming back. They're going to have to run it hot. They're going to have to print more money. They're going to drive the prices up of these things. Make sure you get yourself some Bitcoin, okay? Bloomberg wrote U.S. gold hit $1 trillion in value. With gold reaching record highs, the U.S. gold stockpile has never been worth more. And I thought it was very notable that Bloomberg wrote this piece. But this is the type of shit, guys, where people are saying, oh, well, this must be the top. Bloomberg is writing about how high gold is. Gold's going to crash now. It's been going up for too long. It's like 3 straight months of green gold. Oh, this is the top. Did you see that all the... No. Want to know how I know? This is the market value of U.S. official gold as a percentage of foreign-held U.S. treasuries, U.S. debt. Guys, we're at the bottom. Tops in gold are when the market value of U.S. gold is like 40% of foreign-held U.S. treasuries, or 60% of U.S.-held treasuries, or 125% of U.S.-held treasuries. So if gold were to go on to hit $40,000 an ounce, okay, yeah, it might be a top, because the percentage of gold reserves relative to foreigners owning our debt would make sense. Got it. All right, you guys are saying my audio's running low, and I can't ignore your messages. It's really bothering me. How do I... What about now? Oop, that might be way too high. Is that better? Whatever. Not a professional podcaster. Trying to deal with audio issues here. The reason I know that gold is not at an all-time high, or not at a top, it is at an all-time high, it's not at a top, is simply because if you look at the gold value relative to the debt situation, listen to me clear, guys. This is what matters. It's all relative. I know that we're not used to things going all-time high after all-time high after all-time high after all-time high. But this is the new normal. The dollar has to crash. It has to go down against assets. The debt is out of control. The post-1971 dollar is dead, guys. In 1971, the U.S. government divorced themselves from the gold standard, divorced themselves from having to have any relationship with Mother Nature. You know, back in the day, you couldn't print dollars because you couldn't print gold that backed it. But now they can. They started that in 1971. It was an unsustainable situation. And it's just unraveling. We're just getting started. Look at this chart. This implies that, yes, the U.S. government's gold position is now worth $1 trillion. It could grow to $10 trillion. It could grow to 20, 30 trillion. They could grow their way out of the debt, like Trump said, where the gold on balance sheet is worth 20 trillion. The Bitcoin on balance sheet is worth 20 trillion. Now, what is a dollar worth in those scenarios? No, the dollar's probably not getting you much gas. It's probably not getting you much food. It's probably not getting you much housing. But Bitcoin and gold will, for sure. Sats will get you what you need, for sure. For sure. For sure. Right? You guys picking up what I'm putting down? De-dollarization accelerates. If gold reaches roughly $5,500 to $5,700 an ounce, all else being equal, it will overtake the dollar as the world's largest reserve asset. Tokenization will further enable gold's integration into the global trade and finance. Gresham's law. The dollar's monopoly is ending, guys. I don't know how else to put it to you. And people think that we can do so. Back in 1980 to 2000, Paul Volcker, he was able to slam on interest rates, so hike rates up, and really pause what was becoming an explosive gold rally after the 1971 divorce from the gold standard. People think that we could go back to that. People think that we have a variety of tools in the toolkit that, oh, gold is running away. Oh, Bitcoin's running away. Oh, stock market just keeps hitting all-time high after all-time high after all-time high. They're not going to let this happen. This is the top. Sell before the next FTX bust. Guys, listen, I'm not here to say what's the top, what's not. You guys know I don't trade. I stay humble. I stack sats. I'm not here. This isn't a trading show. Fuck that. Sorry. Just not me. Hard work, principles, morals, family, health, humble, stack sats. Okay? I just buy the Bitcoin no matter what. I wake up every day. I work hard. What's the best place for me to store my hard work? So far, it's been Bitcoin. I'll wake up tomorrow. I'll make that same decision. So I'm not here to call tops. But what I will tell you is this. Mainstream media, the greater West, majority of America, Europe, the West at large, they do not appreciate that an existing chapter is closing. The game has changed. I'm telling you guys right now, the game has changed. The gig is up. Okay? We need to start thinking in relative terms. Gold is becoming the largest reserve asset in the world. Gold is not even 20% of foreign held U.S. treasuries for gold on the U.S. balance sheet. Bitcoin is only $2.5 trillion. Bitcoin is still worth less than certain companies like NVIDIA. We are not even close. The beginning is ending. From CNBC, the retail investor crowd has a new trade it is chasing. It's fueling Bitcoin and gold rallies. They literally published that the debasement trade is Bitcoin. The bank is in reference to Chase Bank. The bank defines it as a trade that, quote, reflects a combination of factors, which in our client conversations range from elevated geopolitical and policy uncertainty to uncertainty about the longer-term inflation backdrop to concerns about debt debasement due to persistently high government deficits across major economies to concerns about Fed independence to waning confidence in fiat currencies in certain emerging markets in particular, and to a broader diversification away from the U.S. dollar. This is Chase Bank, reported by CNBC, about how the debasement trade has gone mainstream. Things like inflation, debasement, these are common knowledge terms. And let me explain, because I recently learned that a lot of younger folks, Gen Z, listen to the show. And maybe sometimes these terms or these ideas aren't super well understood, because at the end of the day, it is a lot of hocus pocus garbage. And it's a lot of unnecessary complication, this financial system. So here's the deal. If the U.S. government is in debt, which we all know they are, unsurmountable amount of debt, ridiculous. Like, no one thinks they can pay it back. They know they can't pay it back, right? So the U.S. government's in $37 trillion worth of debt, okay? Now, typically, for a normal person like you and I, anyone who's in debt has two options, only two. One, they could pay it back like an honest person. If I'm in debt, $20. I can pick up the phone and say, hey, where do you want to meet? I got your $20 I owe you, right? Pay it back. My second option is I can default. I can pick up the phone and say, hey, I don't know if you're ever going to want to talk to me again. I'm so sorry. I know this is going to impact our friendship, but I'm defaulting on the $20 I owe you. I simply can't pay it back. Those are the two options for any normal person when they're in debt. What you guys have to understand is that the U.S. government uniquely has a third option, unique to them, because they can print what they owe. You understand? They can devalue what they owe. And time again, we know the U.S. government cannot afford to pay it back. We mathematically know they can't. We've walked through the economics on this show. They also cannot default. They can't pick up the phone and say, guys, in fact, a default would actually be the most bullish case for Bitcoin. If the U.S. government said the dollar's dead, we're moving on to something else, Bitcoin would go to $1 million tomorrow. The only option, if it's a multiple choice, the only option they have is to print what they owe, devalue the debt. I used an analogy before. I know this is stupid, but this is like how I would explain it to my baby sister or something. It's, if I owed someone 20,000 Taylor Swift tickets, was the analogy I used for my baby sister. I know it's dumb, but just bear with me. If I owed someone 20,000 Taylor Swift tickets, and at the time a Taylor Swift ticket was like $10,000, so that's like a ton of cash, right? A lot of tickets. And I was Taylor Swift, okay? I could try and find the cash to pay for that. I could default, or I could just make a Taylor Swift ticket worth $1, and then I can afford it. Make them worth a penny, and then I can afford it. Taylor Swift could print a bunch more tickets. Oh, these tickets, yeah, they seat you in the lawn outside the stadium. You get a ticket into the parking lot, not like in the stadium, but it's a ticket. Devalue what you owe. As long as what you owe is worth less, you can pay it back eventually. So, going onwards and on this theme, this is Luke, the debasement trade since COVID. I mean, we got to hammer this point home for you guys and for the whole audience. This is what matters, okay? In dollars, over the last 5 years, guys, since COVID, 5 years ago, in dollars, the NASDAQ is up 165%, so it's more than doubled. The SPX is up 102%. It's more than doubled. Home prices, unfortunately, are also up 56%. So those that have been in real estate have performed 56%. Those that can't afford real estate yet, it's getting much more unaffordable, 56% more unaffordable. However, guys, in gold, so if you do not measure the NASDAQ, the SPX, and housing in dollars, and you measure it in gold, the NASDAQ is only up 7% since COVID against gold. It's up 165% in dollars. It's only up 7% against gold. It's down. The SPX is down 18% against gold. Not up 100%, down 18. And home prices fell 37% against gold. So if you were trying to get a house during COVID and you couldn't quite afford one, housing has gotten 37% cheaper just by measuring in a different asset, just by measuring in gold and not dollars. Do you understand? Now let's do Bitcoin. The NASDAQ is down 78% since COVID against Bitcoin. In dollars, it's up 165%. Against Bitcoin, it's down 78%. Stocks on the NASDAQ are 78% cheaper. You get a 78% discount if you simply used Bitcoin as your savings instead of dollars. Let's do the SPX. They're down 84%. The SPX is up over 100% since COVID in dollars. It is down 84%. You get an 84% discount. Let's do housing. Ladies and gentlemen, real estate is down 87% in Bitcoin terms since COVID. If you have been saving in Bitcoin since COVID, you get an 87% discount on buying a house. That's the debasement trade. That's why I started Bitcoin in 21, Strike in 21. That's what we're doing at Strike. That's why I get my paychecks in Bitcoin. That's why I pay my bills with my Strike account. That's why I borrow against my Bitcoin to finance my life. The debasement trade. Guys, you live your life on dollars, your life gets more expensive. You live your life on dollars, you get less housing, you get less stocks, you get less food, you get less vacations, you get less life expectancy, you grow less family. You live your life on Bitcoin, you get more housing, more equities, more family, more health, more vacations, more education, more everything. How you store your time and energy defines the quality of your life. The quality of your money is the quality of your life. The debasement trade is going mainstream. What we're talking about is going viral, guys. This is it. This is it. Okay? Let me tell you guys something, okay? And I say this without, there's no ego in what I'm about to say. It's just math, okay? I've been living my life on Bitcoin for a while, okay? If Bitcoin is going up 50% a year on average, so 50% CAGR, that's compound annual growth rate, that means that my net worth has doubled every 18 months. That means Bitcoin on average doubles every year and a half. Guys, that's the dollar debasement trade. That's it. Everything around me has gotten cheaper. And it's not just me. I'm not special. In fact, I'm kind of weird. Sit in this empty closet constantly. I'm a weird guy. It's whoever figures it all out. It's whoever owns Bitcoin. It's whoever takes the time to think for themselves, have their own opinion, try and make sense of the world. This is it. If you own Bitcoin, Housing gets cheaper every year for you. Food gets cheaper every year for you. Oh, the vacation that you couldn't afford? Yeah, take your girl to the south of France. Oh, the college tuition that your kid couldn't get into? Wait a second. You don't need student loans, buddy. I got this. The house that you guys always wanted to raise your family in? Wait a second. We can do this. We can move out of this one-bedroom apartment in the middle of a dirty, crime-ridden city, and we can get ourselves some land. That's a Bitcoiner lifestyle, right? This is Bitcoin over the last 5 years. Housing, it's down 80%. Food, guys, down 84%. Groceries are 84% off for Bitcoiners. This is only 5 years. If I were to make this 10 years, or when I got into Bitcoin, it's down 99.99999%. But here's the deal. Everyone always say, bro, I mean, what do you want me to rewind time to 2013? I couldn't have got into Bitcoin back then. No, I'm not asking you to do that, actually. In fact, those words never came out of my mouth. What about 5 years ago? Reasonable. COVID, right? The best time to buy Bitcoin was when Satoshi mined the first block. The second best time is right now. Okay, let's keep going. God damn it. What about the consumer price index? The consumer price index is down 84% against Bitcoin. So all the things that the government claims you need to live a healthy life are 84% off if you saved in Bitcoin. What about the S&P 500? 78%. What about oil, which is a proxy to energy? You know, energy, the thing you need to watch TV, take an Uber, fly a plane, energy. You know, the story of humanity is being able to commercialize energy from the sun, from that orange thing in the sky. So energy, the thing that rules our life. With more energy comes more prosperity. Yeah, energy, access to energy has gotten 81% cheaper by saving in Bitcoin. Crazy. Absolutely crazy, guys. Paul Tudor Jones says ingredients are in place for a massive rally before a blow-off top bull market. I agree with him. He says that it feels exactly like 1999. What was 1999? Well, you had the dot-com bubble. Now, the bubble for me is in the dollar. It's in debt. It's not in Bitcoin. But I agree, guys. I think that this is the end of the beginning. Dollar debasement is going mainstream. Everyone and their mother now knows you cannot save in dollars. And if you're going to save in something, what should you save in? Let's listen to what Paul Tudor Jones, legendary billionaire investor, had to say.
If you look at the biggest winners, right? The biggest winners are gold. I think it's up 46, 47%. Bitcoin, I want to say it's up 50 or 60. I'm not even sure. There's a Morgan Stanley basket that's a retail flow basket that has all the meme stocks in it. It's up 67, 68%. So it's really what retail jumps on. So crypto, digital gold, that's obviously something that's very, very appealing.
And does that mean you're jumping on all of that right now?
Well, I'd want to have positions in all of it, for sure. So if you said to me, what are going to be the winners? Again, we have this race.
Right.
The race realistically is certainly to the end of the year because that's when everyone marks institutionally. And then you have to figure out what's going to go on in next year. So what would I want to have? I'd want to have a combination of gold, crypto, probably the NASDAQ. I think, I want to say that I've said that before, and I think that's still the right one. And I think whatever the fastest horse is at this point in time probably has a good chance of being that on deck 31.
The debasement trade's going mainstream, guys. Bitcoin's been the fastest horse for the last 15 years, and it's going to continue to be the fastest horse. The beginning is ending, but we're nowhere near the end. The end is only beginning. In fact, I don't even think the end has started. They have to print what they owe. They don't have a choice. They cannot pay it back. They cannot default. Bitcoin is the best expression of currency debasement. That's what we've been saying on this show ever since it started. And by the way, guys, it's the only expression of currency debasement that all of us can own. Here's the thing. In prior moments throughout human history, we all couldn't own the coolest real estate on the beach in Miami. We all couldn't own the nicest blocks of New York City. We couldn't. We couldn't own the fancy securities instruments that Goldman Sachs was selling to their high net worth client list. We couldn't own that. You and I, we can all own Bitcoin. All of us. Everyone on the planet. It's the fastest horse that we can all race. That's what makes this different. We all have access to the exit door. Now, listen, and listen closely. The price to get out is not equal. The opportunity is. Do you understand that? The price to exit today is $125,000. Tomorrow it might be $130,000. A year from now it might be $500,000. We all have equal access to exit. Everyone listening to this, you can put in the work, do your own research, start thinking for yourself, take care of your health, take care of your family, work hard, optimize to save, and store it in Bitcoin. You can do that. And over the next 5 years, housing might get 87% cheaper. Groceries might get 85% cheaper. We all have the opportunity. That's the most important part. But I'm not going to lie. Not everyone can fit through the door. Your friend 5 years from now that's like, oh crap, you were right. They might be buying $1 million Bitcoin, guys. But the dollar debasement trade, it is absolutely going mainstream. And I will say, self-plug to my own company, Strike. I know this isn't ads. It's not like my company's paying me. It's the same money, right? So that's not a thing. But I live on Bitcoin. Like, I'm running the dollar debasement trade to a T. I own $0. I get paid in Bitcoin. I have all my money in Bitcoin. All my money is in Bitcoin, my companies. So equity in my businesses, Bitcoin, and I own this house that I'm sitting in. That's it. That's it. I'm running the dollar debasement trade, and so many of you are too. And like I said, at 50% CAGR, our net worth doubles every 18 months, every year and a half. Things like housing, like when I got into Bitcoin, my dream house was like 100,000 Bitcoins. And then it was like 10,000 Bitcoins. And then it was 1,000 Bitcoins. And then it was 100 Bitcoins. And then it was 10 Bitcoins. Now, it depends on where you want to live and what your dream house is. But for many, their dream house is less than 5 Bitcoin. Now take the reverse. When I got into Bitcoin, my dream house was like $1 million. And then it became 3 million, 5 million, 10 million, right? All right, last, the global exodus. So, par for the course, I wanted to squeeze in a little macro here, guys. But India's September gold, silver imports nearly double despite record prices. So, this is not a retail-driven frenzy. I'm telling you guys, I can't say it enough, this is different. This is the end of the post-$71. We're entering a new monetary regime. Neutral reserve currency status, open monetary competition. The world will have an open monetary competition for what money is the scarcest and hardest, what money is the most divisible, what money is the easiest to store, what money is the easiest to verify, what money is the cheapest to transact. It's going to have an open competition. We're living in that era. The post-$71 is dead. Foreigners are not buying U.S. debt. They're rotating into neutral reserve assets. May the best money win. May the best money win. I also want to make this point for people that say, because here's the reality, guys. The world is investing a tremendous amount in non-dollar payment rails, okay? So this is China's yuan-dominated bulk commodity trade. Look at how fast it's growing. So I just like there's a naive, gullible, like the world needs US dollar payment rails in dollars to operate and function, and they're actively building so that that's not the case. So this is from Bloomberg. China bans new BHP iron ore cargoes, escalating pricing dispute. So they banned cargo trade in dollars. Said it wasn't allowed. So I just want you to know, like, the dollar debasement trade is not just popular on CNBC and Paul Tudor Jones. It's not just popular with you and I. It's not just popular on Twitter or on Instagram or TikTok. It's popular in China. It's popular in India. It's popular in Russia. All-time high gold, all-time high silver. Record imports of gold and silver at the BRICS nations. Record growth for China-denominated payment rails globally to settle commodity trading. China banning U.S.-denominated trading for certain commodities. Okay. Then last, the apex. So I just thought this was funny. Bitcoin's the apex predator. Okay. It's the king of the jungle. It's been the best performer. It's going to continue to be. And it's not because we have like the biggest central banks or the biggest militaries or the biggest that, right? Because you're like, oh man, well, gold, China's the gold bull, and with the U.S. military backs the U.S. dollar. I'll tell you why Bitcoin's the apex predator. Because it's the scarcest. Because no matter the amount of demand, you can't make any more of it. There's 21 million, and that's it. That's it. That's it. Okay? That's why. So JP Morgan says Bitcoin's undervalued versus gold, highlights significant upside to 165,000. Next. Citi introduces new 12-month price targets for digital assets. Well, fuck cryptos or digital assets, just Bitcoin. Bear, 82K. Base, 181. Bull, 231. JP Morgan and Citi calling for Bitcoin to go 165, now 231. This is the apex predator, guys. This is the king of the jungle. Look at this. Bitcoin and traditional assets ROI. If you take away one thing, look at this. Bitcoin has outperformed gold in the S&P 500 every single year. If you owned it for 1 year, 2 years, 3 years, all the way to 14 years. It's the scarcest thing you can own, and it's available to all of us. All of us have a ticket out. They have to devalue what they owe. They have to print what they owe. I promise you. It's going mainstream now. We're the crazy people at the party that were right. Called us conspiracy theorists. Called us nut jobs. We're right. I remember when buying Bitcoin made me a loser. Now it makes me early. We were right. And the notion that there's a competitor, or wait, should I think about owning? No, you shouldn't. No, you shouldn't. No, you shouldn't. Simplicity is beauty. Keep it simple, stupid. Kiss. The apex predator, the king of the jungle, the king of the jungle. I thought this was cool from Mr. Hodl, friend of the show. Oh boy. We're at 116K with zero hype. This is going to get stupid. Yeah. So for context, this is Bitcoin as a Google search term throughout its history. We're at like the lows. We're at like the lows. Again, this is more evidence of this is the end of the beginning, not the beginning of the end. Gold as a percentage of foreign held U.S. treasuries looks just like this chart. barely noticing. We're going way higher. They're printing way more money. We are just getting started. Okay, strike. Listen. The biggest thing from the strike side I want to tell you guys is I have a lot to talk about on the strike side. I'll keep it quick-ish. But the biggest thing I want to tell you guys is Europe. Update your apps and check your strike account, okay? There's all sorts of rules that limit me on what I can and can't say, but obviously I see all the questions in the chat. When Europe lending, when Europe lending, when Europe lending. Now, check your apps if you're in Europe. We did it. That's, you can ask me whatever questions you want, and I have the right to answer your questions. But for the ones I'm seeing in the chat, Europe lending, Europe lending, Europe lending, Europe lending. When can I get Europe lending? Check your apps. Check your apps. We did it, fam. We did it. In other strike-related news, I'll keep this really quick. We got our Louisiana license. So Louisiana lending is now live. And then here are some of the stuff that we haven't tweeted yet, but we will. For Kansas, our minimums lowered from $72,000 to $10,000. So for Kansas, the new minimum is all the way down to $10,000. For Missouri, payment at maturity. So the type of loan where you don't owe us monthly payments, but you can get a loan and we roll the interest into the principal, meaning you owe us the principal plus the interest at the end of the loan. You don't owe us anything monthly. You can go off, do whatever you want, and in 1 year you owe us the money back. That's the type of loans I use. I get payment at maturity loans, so I take out a loan, Strike gives me the cash immediately. I go on, I do what I need to do with the money, and I don't owe anything until a year from when I open the loan. That is now available to folks in Missouri, okay? To folks in Missouri. But the big one is Europe. Europe. We love you. I love Europe. I was just in France. I was just in Mallorca. I'm going to be in Amsterdam in about a month. I love Europe. You guys are the best. And I know you've been asking me every day, when lending. Right now, go check your apps. And then for 21, listen, the government shutting down is unfortunate because we're seeking approval to go public from the government, but that's okay. The coolest part about 21 as it stands right now, I obviously can't tell you certain stuff because I'm in a quiet period, but for what's public knowledge, in my opinion, the coolest part about 21 is that we've already built a Bitcoin position in escrow. So a lot of these other companies, they're waiting to get approved to own the Bitcoin. We are not. So in escrow, you guys can go to xxi.mempool.space. We do proof of reserves, and we have about $5.5 billion of Bitcoin already. So incredibly impressive. Our average price in acquiring that Bitcoin is a little over $87,000 per Bitcoin, as we said, at $125,000 today. So really excited for 21. Obviously, the government shutdown is hilarious, but we're cooking. And I can't wait to tell you guys a lot of stuff. So with that, let's get into some Q&A. We're just about the top of the hour. Good hour-long rant or so, give or take. And let me answer some questions, probably about EU lending. So let me pull up my questions doc real quick. And let's get this show on the road. There we go. Okay. I gotta blow my face up. You guys look like looking at these pearly whites. All right, let's go. First question: how do you feel about a changing monetary order in a world with nuclear weapons? I actually think that it's going to be peaceful. I don't know how much hot war we'll experience. Like, for example, I was saying the level of assassinations was rivaling the mid-1800s, which that obviously was when we had the Civil War here in America. And people were asking me, you think we're going to have a civil war now? No. I do not think that the North and the South are going to create an army and start shooting each other in America. No, I don't. And even if the left versus the right, the red versus the blue, I do not believe that. I think we'll live in like Cold War. So online threats. I mean, I do worry about safety. Like, I think crime rates in major cities is going to continue to rise. I think assassinations are going to continue to rise. I think violence will rise, but not war. I actually think that the change of the post-$71 is actually very anti-war. It's pro-safety because a lot of, there's a thought that fiat supports war and war supports fiat. You guys know that back before the $71, in order to go to if you thought you were in threat. So if we wanted to just go fuck someone up for no reason, or we wanted to just go bully another country, you couldn't afford to do that because the people wouldn't give up their savings. People would only give their savings to the government if they felt like they were threatened, if their lives were at risk, if the country desperately needed to defend itself. And so on a gold standard, the world was a lot more peaceful because you couldn't just print money out of thin air. The difference between being on a gold standard and a fiat standard is because with gold, the conscience of the public, the opinion of the people is what defined whether we went to war or not. Now it's just the opinion of politician, and they can deprive wealth from the people. They can take wealth from you forcefully via inflation by printing money. Before, you had to go in your basement, grab the gold, and give it to the government. Now they print a bunch of money, and they've taken the money from you just via inflation. So before, you're getting less housing in the future because you gave your gold to the government. Now you're getting less housing in the future because the government printed money and took wealth from you. And so fiat is much more pro-war because governments can afford war whether it's a good idea or not, whether the people like it or not, whether the country at large supports it or not. And so fiat supports war, and war supports fiat. And so if we're rotating out of the post-$71, I actually think it's pro-peace. I actually think we'll see less war. I think the U.S. is struggling to produce as many weapons as Russia and China. And I think that we're seeing, like, I saw an article. I didn't want to lean too much into the macro. Bitcoin's at all-time highs. I think we should just talk about, how to put on the debasement trade and exit. But there are a bunch of articles on how the United States is thinking about prioritizing itself as far as weapon production as opposed to anyone like Ukraine or anything else, and that there's a shortage of weapons and that the United States wants to focus on itself. And you can extrapolate that to if we're having a shortage of production because of our fiscal situation, because of the fact that we've, globalism, we've exported our ability to do everything, and China's putting a bunch of, by proxy rules in place where we can't use their rare earths. There's going to be a lot less weapons, a lot less war that we're supporting. I think you're going to see a lot more peacetime presidents. Like Trump claims he's a peacetime president. I assume J.D. Vance will run next election. He'll do the same. I bet the Democrats do the same. So anyways, that's my opinion. How do you think the U.S. should also buy gold and silver like BRICS? Oh, do you think? Not how do you think. Do you think the U.S. should also buy gold and silver? Yeah, I mean, I think the U.S. should buy Bitcoin. Obviously, I assume you guys know that's my opinion. But let me tell you the complication. The problem is the U.S. runs a twin deficit. So as I talk about, if we were a company, we would be running I just got it. What are you saying, Dylan? My team said that something broke. Is something broken? Oh, that's fine. Yeah, man. Not a professional broadcaster. I'll never be able to figure this out. Do I think that the U.S. should buy gold and silver? I think the U.S. should buy Bitcoin, but we run twin deficits. And so the problem is we don't have any money to buy these things. That's the problem. We are an unprofitable country. If you were to think like a company, we're unprofitable. We spend more than we make, than we consume, than we import. And so it's all optics. You say, yeah, but we can print money. Yes, the U.S. could print money to buy gold and Bitcoin, but that would be actively devaluing the dollar against gold and Bitcoin. It would send Bitcoin to $10 million a coin. It would send the dollar to zero. And the question is that what they want to do? Right? At the end of the day, think like a politician. Your job is to get reelected. Your job isn't necessarily to solve problems. Sometimes people don't want solutions. I've always said, I can solve the U.S. government's problem in 10 seconds. Super simple. It's as simple as don't be the world reserve currency. All the problems would solve themselves from there. Promote Bitcoin as the next world reserve currency. In a decade, majority of our problems would be solved. No problem. But is that going to get them reelected? That's the question. And so printing money to buy stuff is a quick way to not get reelected, because majority of the population that doesn't own these things yet and owns dollars, you're going to rapidly inflate their life. All their life savings are going to be worthless. You're going to crash the current financial system as you know it. Yes, Bitcoin will go up a lot and you'll be able to pay off your debt via default because the dollar is now worthless and Bitcoin and gold are to the moon. Look, we have $500 trillion worth of stuff on our balance sheet because gold and Bitcoin are worth so much and the dollar is so worthless. But are you going to get reelected? Is there going to be violence in the streets? That's the thing. So do I think they should? In principle, yeah. I think the U.S. should be the biggest Bitcoin holder in the world. I think there's nothing more American than Bitcoin. Like the ideals that founded this country, Bitcoin is American ideals. But how do they do it is the question. And you see Cynthia Lummis supported, well, let's revalue the gold, then take some of the excess cash that we get from revaluing the gold and buy Bitcoin with that. That's an option. That is highly inflationary and printing money, but that's not like in your face printing money, like the Fed print money to buy Bitcoin. That's not that necessarily. So the question is, how do you do it? Not do you do it? Okay, next question. Hey, Jack, I still don't get why stable coins will lead to Bitcoin going up. Please explain the link. Many thanks, amigo. Because more liquidity in the system, the predominant use case for stable coins is being the reserve trading pair for Bitcoin. That's the use case. The quickest way to grow stable coins is to grow Bitcoin. Like if Bitcoin goes from 2.5 trillion to 5 trillion, then the stablecoin market cap is likely going to have to around double as well. Because the most liquid trading pair Bitcoin has is USDT. Inside the United States, we have BTC USD. Outside the United States, it's BTC USDT. And honestly, also inside the United States too. So stablecoins, and particularly Tether, is the reserve currency trading pair against Bitcoin. And so that's the link. It's pretty simple, is that if the US government wants stablecoins to grow, they then, by proxy, want Bitcoin to grow. The US government doesn't care if Bitcoin goes up a lot. Right now, they're just trying to find ways to finance the government, someone to buy the debt. And if stable coins are the balance sheet that they can repress, so be it. That's fine. Let's go. And so the question is then, how do we support stable coins? Well, you support Bitcoin. That's how you support stable coins. The Bitcoin to stable coin market cap ratio has been historically somewhere between 2.5 to 10. So, if you want, Scott Besson has said he wants stablecoins to go to 3.7 trillion. They're at like 250 billion right now or something like that. So he wants them to more than 10x. Okay, so that means he wants Bitcoin to 25x to 100x from here. That implies at minimum like a $2.5 million Bitcoin at minimum. It's the easiest way to do it, no doubt. So I guess that's the simple way. You can get into, you look at the volume and the liquidity profile and everything, but I think that's the simple way to think about it. Yo, Jack, what do you think about the status of privacy in Bitcoin? Should Bitcoiners be worried about blockchain surveillance and consider KYC alternatives for parts of our stack? Listen, I think for one, I'm not worried about privacy in Bitcoin. There are ways to privately use Bitcoin. Should you be conscious of regulated services, what KYC implies for you? Of course, absolutely. But at the end of the day, again, I really believe in the free market. I think people are going to value what benefits them. If you need privacy, you're seeking out privacy, like Bitcoin can offer that for you. There's just no doubt about that. But also if you're looking for convenience as opposed to privacy, Bitcoin can offer that to you as well, like with something like Strike. So I don't know how to answer the question. I think the status of privacy in Bitcoin is fine. Can it be better? Yeah, of course. But that's the cool thing about Bitcoin is it's technology. We're going to be working on it forever. It's not like a rock. We can't work on gold. We can't work on gold's privacy. We can work on Bitcoin's privacy. So there's always going to be stuff to do. Bitcoin's going to be getting better forever. That's one of the coolest parts about it. But the status of privacy in Bitcoin is fine. You can absolutely use Bitcoin privately. There are plenty of ways to do so. I think it's fairly accessible. And the market is going to value it appropriately. And what I mean by that is, sometimes people say, why isn't the only thing everyone's working on scaling? Well, that's not what the market wants from people like me. I tried that. I worked on Lightning for years and years and years. And it didn't really work because no one gave enough of a shit. What they really wanted was a simple way to buy Bitcoin, a way to borrow against their Bitcoin. They wanted a global Bitcoin company in the US, but also in Europe. You guys wanted me to get a bit license. So the market is going to demand where value, where utility is most valuable. And so I think privacy is still niche. And I'm not saying that's a good thing. I think that's kind of unfortunate, but I think it's still a niche part of Bitcoin. And yeah, I would say it's good for now. And if privacy is relevant and valuable to you, there are absolutely ways to achieve that. And you can do some of your stack no KYC. There's no problem with that. It's just, again, eye of the beholder. What are my thoughts on Stretch, STRC, Sailor's preferred vehicle? What if participants all want to sell in a downturn? How will they keep the target of $100? I've kind of talked about Sailor's preferreds, I think in a prior Q&A episode. First of all, I don't own any of MicroStrategy preferreds. I mean, it's the equivalent to me of owning fiat. Like Sailor doesn't want to own them. That's why he's selling them. Like MicroStrategy doesn't have any Stretch on their balance sheet. They just have Bitcoin. So I want to own Bitcoin. Sailor wants to own Bitcoin. So Stretch isn't for me. I don't, it's for other people, I guess, that don't know about Bitcoin or don't understand it yet. But, I'm not the target audience there. I don't own any, so I can't really speak to that. And I will say just, as the CEO of 21, I don't think the preferreds are in their current iteration are that appealing to us, at least immediately. I think there are some other things that we are prioritizing first, let's say. But obviously, as I said, one of the greatest blessings of strategy and what Sailor's done is we get to learn from him. And so as this evolves, we get to copy what works, and we don't have to do what doesn't. And so, we owe a lot for that. That's a blessing. Actual preferred is I don't know how the market's going to value that, right? Because you're owing, I know the principal doesn't come due, and that's like a big appeal to some people, but for strategy is that like, they owe money, but the principal never comes due because it's perpetual, but they owe 10% forever. So, if this product works at scale, you're owing a lot of money forever, even in a bear market, and they don't have the money. The only companies that could pay, dividends like this at immense scale with their cash flows are like Nvidia or Meta or Google. I mean, there's like a handful of companies that could actually finance these without having to sell their common stocks. So, the preferred stuff, as a consumer, they're not for me. I don't want to own fiat. You give me 10% on fiat, I get 50% on Bitcoin. I don't want to own fiat or a derivative of fiat. And for 21, I think we're more focused on producing some serious cash flow. We think we can be one of the biggest Bitcoin companies in the world, and that's with operating cash and building products and technology. That's a lot of what Tether and I bring, is not just experience in the industry and massive balance sheet between Tether and SoftBank and an ability to access lots of capital, but also the ability to build stuff. We think we're a blue chip, credible Bitcoin equity with startup upside. We think we're going to be able to deliver a lot of cash flow, a lot of financial services. And I think that's maybe more valuable for us and for shareholders than looking at a perpetual preferred, where it's not clear to me how we would be able to finance that forever. We would just be selling the stock that I'm telling you guys you might want to buy. We would need new investors to pay out our old investors. And so we'll see, though, because obviously Saylor's genius, and I'm watching closely, obviously. We're eager to innovate when we think there's opportunity. Okay, Strike. When you just continuously take on new loans to pay off the last one, does your debt? Oh, I think that means debt. Does your debt just get progressively larger? How do you feel comfortable with that? Well, it's all relative, if that makes sense, right? So it depends. Like, yes, your debt gets larger, but Bitcoin's getting larger. So it depends. And there's a really important clarification here. So yes, the debt's getting larger and Bitcoin's growing, but also I work and I make income. I would say I would resonate with what you're saying a lot more if I was just sitting on my couch all day eating potato chips. But I'm stacking sats. So let's say I make $100,000 a year and Bitcoin's $100,000. I don't know, simple math. I'm adding a Bitcoin to my stack every single year. So all my paychecks are converted 100% into Bitcoin. So every single year, the salary that I bring in is converted into Bitcoin. And I'm not selling any of that Bitcoin. I'm constantly borrowing against it. So my Bitcoin is growing both because I'm working really hard and also because its CAGR averages 50%. And so even when Bitcoin goes through a bear market, like let's say what we saw in some of these charts I showed on the episode is Bitcoin's green year, one red year, green year, one red year, green year. So Bitcoin will go up 3 years in a row, and I'm buying because I'm working hard. So I'm making $100,000 a year. So that's $300,000 in 3 years I'm making buying Bitcoin. It's going up. And then it does have a correction year, but I've added so much to my Bitcoin position because I've been working. So my number one advice is always to try and live within your means. Always try and consume less than you're earning, right? So you make more than you spend. And so I does that answer your question? Because I guess I understand the directional intent of, it doesn't make you nervous that you're just running one giant, like ultimately levered thing. I mean, if that's what I was doing, but I'm not doing that. I'm borrowing against a small percentage of my stack. I'm working really hard. I consume less than I earn as an individual. So I make more money than I spend to afford my lifestyle. And I'm constantly sweeping that into Bitcoin. So yes, bear markets, I might need to add a little bit more collateral if the market really corrects and stays down there. But I've been growing that collateral because I've been working really hard. And that collateral has been growing as well, right? Like I watched Bitcoin go from $50 when I first got involved to $1,200. And then it fell all the way down to $250. And everyone was like, oh my God, it's $250. But back when I got in at $50, it's still a 5X from when I first learned about it. And then it went from $250 to $20,000. It went all the way down to $3,000. $3,000 when Bitcoin fell from $1,200, we couldn't dream of it going back to $3,000. Then it went from $3,000 to $70,000, all the way to $20,000. Then it went from $20,000 now to $125,000. So it keeps growing. I keep working. So I don't know. Hopefully that answers your question. I'm not doing what you're fearing. Yo, Dylan, can you ask Jack when is Strike landing in Italy? We're just waiting on Mika. So hopefully really, really soon. I would say, hopes before the end of the year, there's a chance for sure. Hey, Jack, Strike question. Is the ability to add a spouse/authorized users to Strike accounts on the roadmap? Would love the ability to have my wifey's paychecks also direct deposit to my/our Strike account. Ooh, good question. I will ask. I don't believe so. We are working on creating multiple wallets within Strike because we know some people want a savings wallet and a spending wallet and a wallet for future collateral for loans. So we're creating that, but adding other folks to the same account, I don't think so, but I will double check that for you. I'm not sure. It's certainly not in the immediate term. Could it be a potential 2026? That's what I don't know. But I'll get back to you guys on that. Hi, Jack. Thanks for all your content. Are you going to do a webinar on how to use Strike and utilize spending and borrowing against your Bitcoin stack? Honestly, that's not a bad idea. I was going to do a video, just record a video. It'd be pretty in depth of just how I use Strike. I actually have some developments on my personal banking situation you guys will learn about this week. The fiat maxis, the suits, Wall Street's been coming after your boy. They've declared war. And so, yes, I live on Strike, officially. It's the only place that will bank me. And it's pretty sick, honestly, because Bitcoin goes up 50% a year. It means it doubles every year and a half. And I've been able to build the debasement trade productized. We've productized the debasement trade. So I will make a video when I do have the time on how exactly I do that. And it's many of our customers at this point. So many people do it as well. And we're even looking at expanding the product to make it even better for you guys. What if, instead of having to open 12-month term loans, we gave you line of credit against your Bitcoin? What if we built a Bitcoin collateralized credit card? So I think it's only going to get better. And yes, I will definitely work on content. Is a webinar like a live stream basically? I don't even know what the definition is technically, but I plan on doing some content. Absolutely. Okay. When it comes to EU lending, where are you live? Where are you live and what are the minimums? Any more you can tell us about the product? You asked. So I'm pretty sure I can tell you. Joint accounts are a part of the 2026 roadmap. Just heard from product. So yes, to answer the question above, spouses and authorized users getting access to Strike accounts, that is part of our roadmap. So it's coming. Where are we live? Let me pull up the very detailed answer here so that I can oh, perfect. That's what I was looking for. Shout out, Manuelo. Okay. Where are we live? We are live. So there's loans for individuals. There's loans for businesses. It's $100,000 minimum for individuals for now. For now, mind you, this is where we got. This is how we got started for U.S. Roll it out slowly. The minimums will come down, so don't get too upset. But €100,000, what am I saying? €100,000 minimum for individuals and 10,000 euro minimum for businesses. Okay? Now, where are we live? Austria, live for individuals and businesses. Belgium, individuals and businesses. Croatia, individuals and businesses. Cyprus, individuals and businesses. Czech Republic, individuals and businesses. Denmark, individuals and businesses. Estonia, individuals and businesses. France, individuals and businesses. Finland, individuals and businesses. Germany, individuals and businesses. Greece, individuals and businesses. Iceland, individuals and businesses. Liechtenstein, individuals and businesses. Lithuania, individuals and businesses. Luxembourg, individuals and businesses. Malta, individuals and businesses. Netherlands, individuals and businesses. Norway, individuals and businesses. Poland, individuals and businesses. Portugal, individuals and businesses. Sweden, individuals and businesses. Ireland, Latvia, Slovakia, and Slovenia, only businesses for now. Only businesses for now. And then we are working on imminently Switzerland, Bulgaria, Hungary, Italy, Romania, Spain, and the UK. Those are coming, but not yet available for individuals or businesses. Okay, you guys asked, so I gave you the answer. Hands are where you can see them. I'm innocent. But that's EU lending. We could not be more excited. And let's fucking go. So to summarize, 21 countries for consumers, 25 countries for businesses, 100,000 euro minimum for consumers, 10,000 euro minimum for businesses. If you guys need our help on anything, we have support in our Strike Private team 24/7 around the clock to help you out. Just reach out to us. Just reach out to me. We are more than happy to help you. White glove service for large transactors, or even just minimums, customers that just have questions, need help. So if you go into your app, you'll be able to see if you're eligible as a European customer, and you'll be able to figure it out. So it should be pretty straightforward, and a huge milestone for us. Huge milestone for us. So I can only talk about it when you guys ask me. So you ask me whatever questions you want, and I can answer your questions. But I cannot go out and market it as aggressively yet. There's just a lot of rules in Europe. Europe loves their rules. They got a lot of rules over there. So just trying to follow the rules. Okay. Yo, Jack, Strike is pound for pound the best Bitcoin platform in my mind as well. Shout out to you. Thank you. Me and the gang all use it for our DCA buys, and we love it. Will we soon be able to change the time of our DCA? Oh, I see all you guys in the chat saying it's not live in Germany. It's not live in blah, blah, blah. You're a liar. I'm not a liar. Just update the app. So if you do not see actually ask me a question. For people that say it's not live in Germany, can you ask me, hey, Jack, is it live in Germany? I can't see it. Put it in the chat so that I can properly answer. Following the rules. Following the rules. Being a good boy. Okay, so for those all asking, hey, Jack, we don't see it in Germany. You're a liar. No. Update your app. So for those that are seeing issues, yes, there it is. Is it live in Germany? Is it live in Germany? It is live in Germany. It is live in Germany. You just have to update the app. So for a lot of you in the App Store, make sure you're on the latest version, okay? Make sure you're on the latest version, and it will be available in everywhere I said it is, okay? 21 countries for individuals, 25 countries for businesses. You guys can go. You can clip this clip if you want to answer other people's questions, because I was just answering your question. And we're going to continue. I still believe before the end of the year, we'll have almost, if not all of the United States. We'll have hopefully, we already have a ton of Europe. We'll continue to expand. We'll continue to bring the minimums down. We're looking at line of credit. It's going to be a lot of fun. So we're just going to keep going. Okay. Can you edit the time of your DCAs? I don't know what you mean by that. So like when they trigger, so you can have multiple DCAs. You can edit the amount of the DCA. You want to edit the time of the DCA. I don't believe you can. Although I personally have never tried, not going to lie. But I will ask. I don't believe you can, if you want, by the way, if you're having issues. Okay, let's go. Next question. How will the government shutdown affect 21? We hoped Q4. Could that move to Q1? I would say, listen, it's not up to me. The government shutdown affects 21 because the SEC is the government, and we're seeking their approval. So if they are shut down, they can't approve us. So I'll leave it with that. But no, I do not think if I was a betting man, I would bet on Q4. I think once the SEC is back and open, we're pretty far along in our process. We've already issued press releases about our S4 and everything. So we're pretty far along. So I'm hopeful that it's fairly imminently. But the government shutting down impacts us because we're seeking the government's approval to go public. And so they can't approve us if they're shut down. What is a Mallers? A Mallers is, you're looking at a Mallers. A Mallers is my family. That's my last name. So I guess a Mallers is me and everyone else that shares my last name is a Mallers. I don't know if there are any other Mallers that aren't my family. Fairly unique last name. But that's a Mallers. People say, this is a good last question. People say concentration is how you get rich and diversification is how you stay rich. Do you ever see yourself diversifying? I don't know who said that, but I don't believe them. I think, first of all, how you get rich and how you stay rich are the same. Like there's no such thing as getting rich is producing value for the world. That's how it should be, is that, if money is time, energy, value, work, labor, abstracted into a market good, then getting rich is accumulating, time, energy, value, effort, labor in excess, meaning you're providing an excess amount of value for those around you compared to the value that you're consuming to produce it. So you're running an extremely profitable thing. So that's how you get rich, okay? How you stay rich is then to do something different than that. I don't understand that. That doesn't make any sense. That's a fiat mindset. It's a fiat mindset to be like, oh yeah, how you get rich is to concentrate on producing an incredible amount of value. But how you stay rich is you follow this dude on TikTok. Fuck that. That's so stupid and it doesn't make any sense to me. So no, I don't plan on ever diversifying. I think diversifying is taking money out of the winner and allocating it to like a bunch of losers. I've showed you guys the scoreboard. It's Bitcoin, 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 Bitcoin. Why would I diversify out of the winner? It doesn't make any sense to me. I own winners. I produce value. So I will never, ever, 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 ever diversify out of winners. I will only do it if Bitcoin's no longer the winner. So I don't know. I think people that say that are very fiat. Oh, I own 17% of my portfolios in bonds, 37% of my portfolios in equities. I own this one ETF that, no, go fuck yourself. Just own Bitcoin. It's pretty simple. And here's the thing. All these like Ken Griffin's the greatest hedge fund manager of all time. Well, how about this? I've outperformed Ken Griffin. What does that make me? I literally have outperformed everybody just sitting in this closet shitposting. What does that make me? I've started $2 billion companies and bought stacked sats for 13 years. And no one, I don't know of anyone that's outperformed us. Well, so what does that make me? Simple. Work hard, fight for what's right, stack sats. Diversify these nuts. Hey, Jack, does Strike White Glove offer assistance with moving loans off of other platforms? Yes, absolutely. So many customers have loans on other platforms where they're charging you 15% or they're charging you an origination fee, or you just don't trust them as much as us. Absolutely, 100%. So if you want to reach out to private@strike.me, we are more than happy to help you transfer your loan over. And we've gone above and beyond to do that. We'll work with you on multiple loans. Sometimes we can adjust your settings. We really curtail it to make sure that you're happy and on our platform in a place that you trust that is probably cheaper and better than other places. So no doubt, reach out to us at private@strike.me, and we are more than happy to hold your hand through the process. We've done it dozens and dozens and dozens of times. Dozens and dozens and dozens of times. Cool. Okay, ladies and gentlemen, with that, I'm out of here. This episode's running for 90 minutes now. It's time to cut it. It's time to cut it. All-time highs. Congratulations. We're really doing the damn thing. We're going mainstream, this whole dollar debasement thing, this whole Bitcoin thing. We're going mainstream. We're going to the moon. So I appreciate it. Like I said, I saw a lot of you guys in person. It was really cool. Like, some of you guys are young, man, like in your late teens or early 20s. Some of you guys, whether I'm boarding a plane or I was at my buddy's wedding, it's just really cool. So as always, I really appreciate the support. My day job is running my businesses. I'm not a professional podcaster, but this has become one of the joys of my life. So it means a lot. If you guys see me in person, don't be shy. Come say hi. Give you a big hug. And to the moon. We were right. Don't let them take that away from you. You're right. You're right.